Hello and welcome to the interview. My guest today is a very special one, not just because he's speaking with us after a long hiatus of 11 years, you heard me right, but also because in his current new avatar, his firm, that's M&G Investments, manages a sizable £370 billion, and that was accounted for as of June 30th, 2021 alone. Please join me in welcoming Vikas Pershad, Asia Equities, M&G Investments. He's the portfolio manager. Vikas, great to have you on the show. Great to see you after 11 years. What is this Eid Ka Chand behavior? Where have you been and how have you been?
Been wonderful. It's great to be here. Thank you for having me back. I've been trying to stay ahead of the markets, also trying to fight off Father Time. I'd say I've had more success with the markets than with Father Time, but he'll come after all of us. But it's great to be back. A lot to talk about.
Lots to talk about, Vikas. Last I recall when we spoke, the Nifty was at what, 5,800? While not as much changed from there, and Reliance is still the largest stock in terms of market cap and its weightage in the index. But I was really wondering, as I was preparing for the interview with you, whether next 10 years, and I hope we speak before that, but in the next 10 years, do you think Reliance will still be the biggest heavyweight on the index, or will that change?
Well, so there are a couple of things to mention before answering that question. First is, as in everything, people remember who was number one. I think it's worth remembering who was number two at the time. So back in March 2011, the second largest market cap out of all the names in the Nifty was ONGC. That is clearly not the case today. So I think the other thing to look at is if you look at the constituents in the Nifty in 2011 compared to today, out of the 10 biggest names, 6 are still the same. That is more consistency than what we've seen in the US with 5, more consistency than what we've seen in Japan with 4. So I think that's remarkable, really. Now, when we look forward over the next 10 years, I think for somebody to knock Reliance off the perch, they have their work cut out for them. I think what I have more confidence in is that the composition of that top 10 will change because of the new listings that are coming, the size of the listings that are coming, and the rate with which they are growing. So I think 10 years from now, when we look at the same list, it will be more different compared to today than today's list is to 10 years ago.
But I have to take it on record, Vikas, that you're not going to take as long as 10 years to speak with us next.
I'll be back. Jab Jajman ki marzi. I'll be back.
Okay, great. When we last spoke, the Nifty, like you rightly said, was at 5,800. Today at 18K, lots has changed. We've had COVID in the midst, of course, and we're still in the midst of the pandemic. While we've done great from the pandemic lows, over the last, say, 2 odd months, the flows to India have faltered a little bit. Many global brokerages right now are citing reasons such as high energy prices, the valuation froth, etc., to this underperformance, and they're also comparing somewhat of a flow shift from India into China. Well, I'm going to talk about the China factor in just a bit with you. Are there non-fundamental reasons to believe that there is going to be a sustained bid for Indian equities in the foreseeable future?
I think the answer is clearly yes. Before we look forward, let's look back again and go back to that March 2011 period as a benchmark. Since then, the S&P has outperformed in local currency terms, the Nifty, and in dollar-adjusted terms, even more so. The Nikkei, which is probably a surprise to people at the time, if you remember that they had just gone through the earthquake. 10 years later, the Nikkei is also up about 3x. I think, yes, the market has done very well over the past decade, but most of that performance has come just in 3 years, 2014, 2017, and then this is one of those years. So relative to the expectations from about a decade ago, I would say, yes, the Indian market has done very well, but it probably has undershot the expectations I had at the time. That's not a cause for dismay. I think that's a great thing because we are allocating capital to these markets today. And when we focus on the next 10 years, it just means that there are more returns in store for the Indian market. Now, why do I talk about multi-year horizons? A, because that's the horizon on which our firm invests. But also B, I think when you look at when these big performance years come, it's impossible to predict. We could have another year in 2022 that is just as good, if not better than this year. It could be a down year relative to 2021. But I think the point is that the Indian market is one that is exciting on a multi-year horizon. So picking and choosing which year or quarter is difficult. And timing entry and exit from the Indian market based on flows in and out of China or some other reason, I think that's difficult. Now, on a long-term horizon, I think it's very exciting because you have purchasing power, investing power increasing, your participation in the market's increasing. You have new kinds of companies that are coming. I think we'll touch on this later, but it's going to be well over 100 companies, perhaps even 200, that list in the next 2 to 3 years. And these are going to be sizable listings, sizable capital raisings. They could, in aggregate, add somewhere between 3 to 500 billion worth of market cap to the Indian market. So that's taking it from 3.5 today to well over $4 trillion in just a few years. So I think those are some of the non-fundamental reasons to be very excited.
Though looking at the short-sighted view, in the very near term, do you think it would perhaps be prudent to bring down your return expectations for India and maybe say that the best in the near term at least may be behind us with the performance that we've had in the last 18 months?
I think that the probability is on the side of yes, saying yes to that question. I think what I would say, though, is if you look at how the market has done from not just the March lows, but let's say June, July, August of last year, there were several points along the way where you could have said that about the market in aggregate, or about certain sectors, whether it's IT services, whether it's hospital services, whether it's some parts of the automotive supply chain or the consumer names, but they continue to grow. Now, within that, I think what is most important to your prospective returns is your time horizon, but then also B, the price that you pay. So yes, I think it's worth revisiting. But one way I think about it is if I am not long something today, if I don't have a position today, what I'd ask myself is if I already owned it, would I be selling it today? If the answer is yes, then I shouldn't be buying. But if the answer is no, then it's the same as buying today. And that's the exercise we go through with every one of our names every day.
That's a very interesting take. The other thing that you touched upon, the China factor, Vikas, the fact that, money clearly of late is moving out of India, pouring itself into China. There could be many reasons, A, their underperformance since COVID, and now them coming off from COVID. But what I wanted to understand is, while people, like to lump India and China together, and therefore even, terms like Chindia, for instance, but does one really have to make an either-or choice? Could both of them not coexist and make it to an investor's list?
Yes, they can coexist. They should coexist. And I think that Chindia term had its time. That time is gone. I think what I would say about the two markets, India and China, is that this year, investor perceptions of both of them have changed a little bit, and the dynamic of the market has changed a little bit. Or substantially in some ways. So let's start in the East with China. I would say that this year the market has probably narrowed when it comes to the number of sectors that people are excited about, and I think that's a natural extension of the new regulations, the new policies that are coming out of Beijing, and we've seen what has happened to various sectors every few weeks, every few months in China. But the depth of the market in China is quite remarkable. So we are excited about that market. What I would say is that if you think about things in terms of absolute and relative performance, I think this year, over the course of the past 12 to 18 months, the China market has probably become one in which absolute performance is becoming a little bit more challenging because you never know where the regulations might come out next. But the relative performance, if you have some insight or you have some perspective on which sectors might be vulnerable, I think you can relatively outperform. Now we move to India, and I think the opportunity set has begun to broaden rapidly. You just look at some of the listings just from this month, and then you look at the listings that are coming. You look at what some of the largest companies in India are doing and how they're evolving and how they're changing. So the opportunity set is both deep now, but deepening. It's broad and broadening. So that's very exciting. And in contrast to China, I would say that the Indian market remains one where absolute returns will be there if you're an investor with a multi-year horizon. The challenge then is, in this market that is poised to do well for years to come, how do you outperform? And so it's a good thing that the Indian market is a stock picker's market, because you can add value through your own research, through your own perspective, and through elongating that time horizon.
Great. So what you're saying is that India is attractive not just on a relative basis, but absolute basis as well. Vikas, before I get into individual sectors, I wanted to understand, given the India context, how is it that you're mapping risk versus volatility? You talked about as to how one needs to now sort of, get back to the drawing board and assess your investments, which have done well so far from the pandemic lows. But are there reasons to look and search for places to hide?
So up till now, I think I've answered yes to every question. This one is no. And I think the reason for that is because, again, if you're a trader with a short-term horizon, then I think, yes, you might want to hide some of your exposure. You might want to reduce substantially your exposure. But I think the opportunity set in India, again, is so broad and so deep that you don't need places to hide. There are plenty of opportunities for relative and absolute outperformance, even at these levels. And there are multiple sectors where we can talk about that being possible.
And I want to come to individual sectors. Since you do believe that there is still plenty of opportunity, let's talk about IT first. Would you say that the best is behind us, or now in the post-COVID world, given the global digitization which is taking place, would you say that IT still has legs to go?
Well, I think so. We are positioned in that sector. We have been since early last year, and it's done well for us. What I would say is that I think the easy gains from re-ratings, that to a large extent has probably happened in multiple companies. You've seen an upward shift along the PE curve of every company in that space. What has not changed really, which is interesting, is that the earnings expectations compared to this time last year, compared to just before COVID at the start of 2020, those remain substantially unchanged. I think if these companies can demonstrate earnings delivery or earnings acceleration on a 1 to 2 year view, then you will see that the stocks continue to go higher. And there could be some scope for re-rating in each one for those reasons. I think managing costs is a little bit trickier. Growing off this larger base is a little bit trickier, but it's possible.
Great. The world has now discovered the BNPL model, and so has India, Vikas. Buy now, pay later is becoming a fast emerging trend. What I wanted to understand was not just whether India will be able to adapt to this global trend swiftly, but also whether the Indian NBFCs and fintech companies will be able to cash in on this beyond the big boys, that's your Bajaj Finance, Bajaj Finservs of the world.
I think this is part of a broader conversation on the democratization of finance, and we can talk about other asset classes, related asset classes later. But so I would say yes, that it is possible for multiple companies to emerge as winners here. I think what will be important, though, is beyond the revenue growth, which I think is clearly available. It's the ability of these companies to generate profitable revenue growth and to layer other services upon the user bases that they are getting. I think these days, if you're in the right theme, if you have the right capital behind you, you can grab the users, you can grab the revenue in the short to intermediate term, but growing profitably beyond that is going to be a challenge. Given that we do invest in private companies, we do see a lot of very promising ones that are not yet public, that could be large companies in due course.
A similar disruption, Vikas, is also playing out within the motor space or the automobile sector here in India. I mean, it seems it's only a matter of time when we'll have many EVs, at least on the urban Indian roads. What, though, is the best way to cash in on this trend? Would it be via two-wheelers? Would it be via CVs? Would it be via passenger vehicles? Or would you say that the best way to actually is go via the ancillaries here?
I missed the last part of the question. What was the last one?
No, I was just wondering what's a better way to play this EV disruption here in India, whether it's via two-wheelers, ancillaries, passenger vehicles?
Yeah, okay, good question. So let's start with the biggest vehicles, commercial vehicles first. There's an entire supply chain that is domestic within India, all the way from the trucks to the components, and there will be more listed soon. So I think it's worth investors spending time there, because we have seen a stagnation in CV demand for good reasons, whether it's emissions or a slowdown in the economy, COVID. The previous peak of 3 or 4 years ago, that will be taken out at some point. Now, whether it's 2 years from now or 4 years from now, I'm not quite sure. But that is not reflected in the equities prices of companies that are exposed to that sector. So I would say, yes, spend time on commercial vehicles. Passenger vehicles, I think it's a unique market given the market share dynamics of one company relative to others. And I think that the PVs, that story will come back as well, just like the CV cycle. I think what is more interesting and where there seems to be more debate, including some of the guests that you've had on from the corporate sector in recent weeks, is what happens to the two-wheelers. I myself, I'm a car person. I don't look very cool on a motorcycle or a scooter, but I think there's a lot of excitement that is going to happen in this space. It's yet to come. And what I would say is, relative to commercial vehicles and four-wheel passenger vehicles, the most disruption and the most rapid share shifts seem to me to be looming in the two-wheeler sector. And the listed companies, the opportunity set of listed companies in the two-wheeler space is going to expand within the next 12 to 24 months. So I think that's where the debate is. And given that we look at private companies, I would say that is where I'm gathering a lot of intelligence and information to be a little bit more cautious on the two-wheelers that are already listed.
Great. The other thing I wanted to talk about, Vikas, up until last year, pharma and IT were talked about in the same breath. They were the defensive sectors, they were the hiding spaces, they were the ones which from the pandemic lows emerged as the true blue winners. While IT has maintained its pole position, I can't say the same about pharma. There is clearly some US pricing pressure coming in. The COVID advantage is clearly weaning off. But what one is seeing here in India is that with the world now returning to normalcy, it's a non-COVID portfolio, be it for pharma companies or ancillaries like hospitals and diagnostics, which are actually beginning to do well. While healthcare clearly post-COVID is one space where you definitely want to be, the confusion is now how, via which route?
Well, what I can say is that where have I been spending my time? So it has not so much been on the pharma and biotech side. It has been more on the services side, where we do have exposure. And when we look to beyond COVID, there is a world beyond COVID. I think what's important is that every one of these companies has learned a lot of lessons from COVID and emerged stronger. And when you look at how these services companies, how quickly they were able to respond in April, May, and June of this year, and how they have become more nimble and more agile in the long term. As a result, I think they are poised well to capture a lot of revenue opportunities and profitable revenue opportunities. I think what's exciting about the services space, the healthcare services space in India, is that for many years, up until now, what you have seen are regional leaders or regional small giants. I think several of these companies are going to become giants on a national stage in due course, and we're looking to participate in that. There will be other revenue opportunities. Diagnostics will be incorporated. The leading players are trying to create ecosystems of data so that when you go for one reason, or your family member goes for one reason, then there's a compelling reason for you to stay within that ecosystem and continue to come back to these same companies. There's also an international revenue opportunity for these services companies that probably does not exist for other subsectors within healthcare. So if you look at how India is just situated geographically and some of the challenges that medical tourism is facing in Thailand or in China or other parts of the world, India is well positioned for that. I think what's also interesting is that we are going to have many more companies listing in this space. I guess these days that goes for almost any sector, but there's a lot of world-leading companies that are coming in healthcare services. So I would say spend time here. The best is not yet behind them.
Okay, so let's talk about what we're talking about most often nowadays, the mega listings, the IPOs, unicorns. And I was just wondering whether or not we really need to sort of redefine the phrase unicorn, given the pace at which they're listing and given the sizes at what, the market cap sizes which some of these companies are creating on listing.
I think that's exactly right. So the name unicorn came because these creatures, these mythical creatures, the $1 billion companies, were so rare. And these days they're not so rare. So I think we just need to redefine what it means to be a unicorn. And that's a great thing. That's a great thing that this value is being created across sectors, across different parts of the country. And so that is very exciting. What I do see is that this should continue. The amount of capital that is targeted for India, the amount of long-term capital that is targeted for India, and the level to which technology is disrupting or forcing the evolution of one sector after another. So I think all that is very exciting, and we invest both in public and private companies. The knowledge we gain from public companies is informing how we invest in the private space, and vice versa. And it's been a really rewarding and enriching experience to be able to do both in a market that is evolving as rapidly as India is.
So what would you want to coin unicorns as? Any new phrase or terminology that you've come up with?
Well, I think we need to retire decacorns. The unicorn might be a $10 billion company to start with. It's a good question. When I come back, less than 10 years from now, then I'll have an answer for you.
Okay. So, just taking up on the point that you were just mentioning, what have been your lessons from the private market as a public investor as well? Given that you yourself have been a very keen observer and an investor as well in some of the edtech and B2B companies.
Well, I think one important lesson is that technology is being democratized. The way technology is deployed is being democratized, is proliferating. You look at the two young gents who just started Zepto, for example, right? That's fantastic. Who knows how that business will evolve? Who knows how that whole space will evolve? But I think that's fantastic. And it's happening in sector after sector, in different strata of society and different parts of the country. So EdTech and B2B, those are massive opportunities. And I think what is encouraging is that the companies that are winning and are growing rapidly, they are not a model that is copied from the US or from China or from England or from Japan. These are domestic, homegrown companies that probably could only have been launched in India. And over time, their business models can be exported, will be exported to other parts of the world. So that's very exciting.
There are two aspects to this, Vikas. Given that we've got a pipeline as heavy as 200 listings, say, over the next 2 to 3 years, what are the implications for the market given the large, sizable IPOs that we have in the pipeline? And B, the other thing also is that whether or not valuation is the right metric. I mean, we've had these debates on whether or not an IPO coming in at so-and-so valuation is really good and ripe to invest in or not. But is that really the right metric?
Well, valuation matters, and the price at which you acquire an asset really does matter. I think, but this is the right question, because what happens, let's confine our view to one of the indices, whether it's MSCI India or the Nifty. What happens when a bank or a commodity company or a company that is seen as old economy is replaced with a large edtech company? It's replaced with a large B2B company, or it's replaced with a large e-commerce company. The multiples will go higher. The long term, but why is that happening? Because the long-term earnings growth is accelerating. It's going to be higher, and the pool of earnings upon which that multiple is based, that's presumably going to be larger. So the composition of the index will change, not just when it comes to the names and the market caps, but the valuation expectations that you have and the benchmarks that you need to use. That all will change. So I do think that valuations matter. They matter a lot, but I think it's the period at which you're looking. Looking at a 1 year forward PE multiple, looking at a mean reverting price to book multiple perhaps, I don't think that that's going to work in this new India that is going to emerge over the next 2, 3, 5, 10, 15 years.
And what could this really mean for the listed space?
But I think the implications are clear that the market will adjust and will go higher as these companies are incorporated. And there will be, again, these broader and deeper opportunity sets to invest in across sectors for a long time to come. If you look at how technology is being deployed and compare it today to, let's say, 2000. So at the time, that was when I started my career in late 99, early 2000. And the dot-com bust boom and bust of that period compared to today, there's really no comparison. These are real companies. Now, what's also different is that there's much larger capital, pools of capital targeting these opportunities, allowing these companies to extend their lives and stay private a little bit longer and grow a little bit longer before they reach the public markets. But I think this is a different market today, and it's a very exciting one, and there's going to be a lot of opportunities for years to come.
What's also exciting is what's happening within the entire asset pool, because that's now increased to cryptocurrencies, to NFTs, to various many other digital assets. Is it a bubble waiting to burst?
Yes and no. So this one is a yes and no response. The tokenization of the world, the crypto economy, all these things, there's something there. We are spending more time on it because companies that we look at across the region and around the world are incorporating these technologies into their business models. So we have to pay attention to it. As an investor in private companies, there are companies that are attracting capital in India that will soon be listed. So there are opportunities to invest at this stage, and then these companies will be public, and we'll need to pay attention to them then. So, but it's not just an intellectual or an academic exercise for us. Some of these are real businesses, and they're trying to do important things. I think the issue of cryptocurrency and NFTs comes down to two things. Number one, people want ownership, just like you want ownership of a home, of a car. You want ownership of digital assets, and tokens allow you to do that. Cryptocurrencies allow you to do that. The other thing is people respond to rewards and incentives. So if you look at some of the gaming companies that are coming up in India that offer you play to earn opportunities, that is an immediate reward. It's an immediate incentive to continue playing and to continue to engage. And so I think rather than focus on one or two of the business models that are out there today, deploying these kinds of business models, I think the lesson is, what is this telling you about where technology is headed, where the future of money is headed? Now, some of these things like drawings of apes, I'm less excited about that. What I do find fascinating is how rapidly the uptake has been of cryptocurrencies and of tokens in India. I was watching on ET Now earlier the collection that Mr. Bachchan launched, and how much money he was able to generate from that, and how many fans he was able to reach through that. I think that's closer to the beginning of the beginning than the beginning of the end, or even the end of the end for that matter.
Tell me you bid for Mr. Bachchan's NFT. Did you not?
So this is why I should be watching ET Now all day, because I didn't see it until after it had closed, but I'll be there for the next one.
I'm certain. But Vikas, such a pleasure having you on the show today and speaking with you after such a long gap. And I hope it doesn't take you 11 more years to next come on ET Now.
It was a pleasure for me as well. I'll be back soon. Thank you very much.